Welcome back, all you capitalist pigs. My name is Jason Stapleton, and this is the Forex Market Preview. Now, if this happens to be the very first Forex Market Preview that you've ever been to, I want to thank you so very much for taking the time to watch this video. And if you are one of the more than 70,000 traders now, remember when it was 2,000? Remember when I used to say, you'd have to be back quite a ways to remember when it was 2,000. But it's just, man, it's just exploding. But anyway, thank you so much for those of you, the 70,000 of you who have who received this Forex Market Preview, and I hope that this just continues to grow by leaps and bounds. But today we're going to take a look at just a couple of things. I know I've been gone for quite a while. I actually was in the office last week, but I didn't have a chance to get an FMP out to you. But I did talk with syndicate members, so those syndicate members got a video from me, and I'm going to share a little bit about one of the ideas that we talked about in the syndicate, not to the degree, because, of course, syndicate members are privy to information that others are not. But I do want to at least let you in on a little bit one of the trading ideas, because that has carried forward into this week. But let's start out with a pound dollar. Now, as you guys can see, pound dollar has actually got quite a bit of consolidation in here. And you can see a lot of lines on my charts for those of you who have taken, either the introduction to Fibonacci's or one of the other little mini courses that I teach, have taught little 2-hour sessions. You'll know that the way I always start out is drawing these support and resistance lines on my chart. The reason I do that is so I can quickly reference where the market is going, and it allows me to cover more markets, because if I have these lines on my chart, I can instantly tell whether or not we're coming into an area that I consider to be a high probability area I want to watch. But what we've got here, I actually predicted this wrongly. The mastermind group was out. We were talking, and I submitted as the market came up into a resistance level coming back to it, right in here. I predicted that we would want to short the market here, we actually did get a little pullback here, but then quickly the market rallied, so I kind of ate my words on that, and that's something that you really need to. That's an important point here, because I don't care what you're doing, whether you're doing fundamental analysis or technical analysis, or if you're doing some combination of the two. There is no perfect strategy. I remember it was months and months and months ago, but I had made a couple of predictions about what I thought the market was going to do, and then the market didn't do that. And I had a comment on the website, and I do read the comments, by the way. I do read every single one of them. And he said, "Well, I guess Jason's holy grail of technical analysis isn't all it's cracked up to be." And I thought to myself, I've never called it a holy grail. It's never been the be all end all. It's just extremely profitable when followed. And this is something I have a week-long workshop that I'm going to be holding online starting on May 7th. Now, you can't sign up for it yet, but I'm going to be putting out a series of videos starting on May 7th. The actual event is not till a week later. But starting on May 7th, you're going to get an email from me. So be on the lookout for that if you want to be part of the workshop. The workshop's absolutely free. It doesn't cost you a penny. And I'm going to be talking a little bit about in the videos that lead up to the workshop, because the way this works, let me start from the beginning. The way this works is I hold a workshop. Before the workshop, I give you a bunch of stuff to kind of set the tone of the workshop, and to basically get a lot of people spun up, that maybe because we get so many people from so many different backgrounds and so many different area or so many different places in their trading career. Some people very new, other people not so new. So what I do is I present a series of videos that ask some questions and require some response in order to kind of set the framework for the week-long live event. And that event, of course, is designed to do several things: increase your skill set and increase your knowledge, and work on your psychology a little bit. And so we're going to be doing that for a week, and be sharing a little bit with you. But inside of that, one of the things we're going to discuss is the hardest thing about trading is really not the following of the plan. Is the following of the plan. It's not really the plan. So you can have a lot of different plans, but ultimately you're going to lose. Okay, you do not get people. You don't find trading strategies that are 99% effective. It's very, very difficult to find one that's more than 60 or 70% effective in terms of being correct, winning trades. And so when you come across something that has a moderate success rate, ultimately what it comes down to is you've got to be consistent with your plan. And so technical analysis does not always provide you the right answer. But as I'm going to explain in those videos that you're going to see, it does tell you what the market is going to do with a high probability. And it does tell you, it does give you an understanding of what's happening in the market. So in this particular case, on the pound, when I take a look at this, I know that we've just broken this resistance level at 161.34. Well, where's the next one? The next resistance level is all the way up here at 165.43. So I've got a couple of options here. I can wait for the market to rally up into 165.43, and I can look to sell them. Now, how would I look to sell them? Well, I would look at it based on a series of potentially of Fibonacci's. So I could draw in my fib here and see, hey, 786, and then a 50%, and then I bring in my Fibonacci extension, and I go swing low to swing high, and back down in. And I can see right around the 1618, I've also got that structure resistance, so this would give me a butterfly pattern. Okay. It's my knowledge of advanced pattern formations that allows me to see this stuff on a regular basis. So I've got a butterfly pattern completion at major structure, because if I collapse my chart up here, you're going to see the resistance level here. That's the next one. You can count them. See the support, the resistance. We broke through that. Now we've got resistance, resistance, and then a little false breakout here at the top. So the question now becomes, how do I want to play this? Do I want to wait for the butterfly pattern to complete at structure before I end up selling, or let's say I'm a trend follower and I now see opportunity. I see a potential move from 161.34 to 165. There's a significant move in there, isn't there? There's a lot of pips to be had. This is a daily chart, so it's a higher time frame. I picked the higher time frames because I want you guys to have a chance to watch it and work with it. You could very easily drop this down to a 5-minute chart, which we do in the live trading room, the FX ratio room, every single day. By the way, those of you who are not members of that room, it just might, over the first quarter, have produced almost a 30% return on equity. And I'm just saying, if that's something that interests you and you're not involved with that, shame on you. But as we watch this, there's another option here. We could wait for a pullback, because what happens is look what happens right here. You see how when the market breaks this support and it goes all the way down here, boom, then it comes back up. Look at where it finds that resistance. That resistance comes in right along the support level. All right, so we have an opportunity here, potentially. It doesn't always happen, but it happens quite significantly, where the market will come back down in, retest this support level. We also have another one back down here at 159. All right, so potentially somewhere in here, you can even just call it somewhere in here, we're going to see a potential reversal. And then we're going to see, most likely, a press up into that 165.43. Now, support level comes in right here. That means that's where your stops are going to need to go, is underneath this support level. So you've got to take a look at this and say, where does this make sense for me to get involved in this trade? And then, plan accordingly. Now, because there's a lot of pips in here, a lot of quote-unquote risk, and risk and pips are two completely different things when we talk about this. You can dial back position size in order to mitigate risk, rather than just looking at it as how many pips you have. So there's a lot of pips in here, so you're going to want to probably dial back your position size if you normally trade on, say, an hourly or a 15-minute chart. If you're going to bump to a daily chart, there's going to be significantly more pips in here that are going to be at risk, so you're going to need to dial back that position size. But this is what is likely to happen here. The market has told us, based on structure, support, and resistance, what its intention is. Its intention is to go higher. Whether or not you understand why, whether or not it makes any sense, doesn't make any difference. The market has said, I want to go higher. And until it gives you another signal, you have to continue to follow that. So we're going to do that. And we're going to wait to see if the market will come into 165 or pull back into 161. Let's take a look at another one. I'm going to bring over the Swissy here. All right. And I've already kind of drawn this in, so hopefully this won't take as long. Come here. and consolidate up here. This, ladies and gentlemen, is a Gartley pattern. And of course, in the week of training that we're going to be doing, we're going to be talking about some of these patterns. I'm going to give you a pattern cheat sheet so that if you guys are not familiar with pattern trading, you're going to be able to see exactly what it is and understand the patterns and be able to reference them in your reference guide. But this is going to come into a 1414, which is a minor Fibonacci level. But right back here, you've got structure supported at 85.99. So this gives you a very high probability long entry with very limited risk. Because if we look at the move that has occurred here, very nice upward move. Boom. And then back, and now we've had some consolidation, looking for a continuation of that trend. Now here's what's amazing. This is actually absolutely a market, and I was talking to a mastermind group about this and made some posts on it, that this is absolutely a trend follower's nightmare right here. Because you take a look at this, and what's happened in the market recently, nothing is happening. You've got just consolidation all the way back since October. The market has done nothing. It's gone nowhere. Take a look at New Zealand. I mean, look at New Zealand. Let's bump it out. Let's do a 4-hour chart. It's even worse on the 4-hour chart. Look at this. Look at the consolidation that's happening right here. All of this consolidation, all the way back since January. Consolidation, then we get a breakout, but then the market goes nowhere. Just chop, 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 chop. What you're going to see, we're going to be doing some exercises in the free videos that I'm putting out. What you're going to see is there is tons of opportunity in here, tons of it. And I'm going to show you some charts that have several advanced pattern formations all locked up inside of this consolidation move. This is a trend follower's nightmare, but it's a ratio trader's dream, because he now has the ability to play these ratios, to play this back and forth, and to make a ton of money in here. So it doesn't matter what type of trader you are, you just have to find a market that is doing what's going to be most optimal for you as a trader. And it doesn't matter, you could just switch time frames if you don't find the type of consolidation that you need in order to trade, because this, I will tell you right here, frustrates the heck out of ratio traders. I mean, you're looking for shorts. Every time you short the market, you get a little pullback and then an explosion, then a pullback, and you try and get some pattern formations and nothing happens. But expansion leads to consolidation. Expansion leads to consolidation. And right now, the market is in a very good place from a ratio standpoint. And, we expect there to be a market that's in a very good place for that for a long time. Let's pop over and take a look at pound yen. Now, this is the one we talked about with syndicate members. And there is actually a 2618 trade that has happened here. Those of you who are not familiar with 2618, don't stress about it. But basically, the market put in a double top here. Then we had a breakout. Broke out to the downside. Look at that structure level I had ID'd at 130.33. We broke out to the downside. Then we retraced. The sell was right here for the 2618. And we talked about, hey, a couple of different options on how to play this. Because what ended up happening was, as we retraced up into this sell zone, if I drop down to a 4-hour, you're going to see that the market decided it was going to sit right on that shelf that it was sitting on prior to the breakout. So this is on a 4-hour chart, so a lower time frame. You had the double top, which actually turned into a triple top here. Market broke structure, rallied back, and then decided to come right back down and sit on that shelf. And I said there are a couple of different ways to play this. You can get long, looking for the 127 extension of this leg of the move, which would take you right up into 133.37s. Or you can follow the 2618 and hold short. I don't know what the market will do, but I can tell you with, blessed assurance that when the market moves, I know where it's going. Right now, we're consolidating. Right now, if you're a 2618 trader, you've already shorted the market and you're going to live with the consequences. Right now, you're feeling pretty good. If you were looking for a breakout, trend continuation, up to the 127 extension, you're hurting a little bit. Your stops are below this shelf here, and you're looking at potentially taking a loss. The important thing is that you're following your plan, and you've done the testing on your plan. You know your plan makes money. And you know that all you got to do is just come to the market every day, come hell or high water, and trade your plan. And what we're going to talk about in the week of training that I'm going to do is we're going to be talking very specifically about the way institutions think, the way institutions trade, the way they not really take advantage, because to talk about an institution or a corporation as though it is a human being is really a false concept. But there are ways that the market takes advantage of people, and there are ways that the institutions look at the market and the traders inside those institutions view the market that most retail traders do not. And the reason that you're coming into the market constantly frustrated and confused and to a large degree angry at what's happening is because there's a failure there to understand what an institutional trader, what a professional trader is seeing. And when you start to see what the professionals see, all of a sudden the world kind of opens up to you. And I actually discussed these concepts even before the free week of training. So, you don't want to miss those videos. And I know I'm kind of pimping my free stuff that I'm going to be putting out. But I just got done recording this stuff, and it's good. It's powerful. I mean, guys, it will have a real effect on your trading if you watch it and follow it. And so after I'm done with it, I'm excited about it, and I want to share it with you. So when those videos come out, watch them, because there's powerful stuff in there. Now, what else? We'll look at one more. I'm at 16 minutes. Yeah, we'll look at one more. I like to keep these videos under 20 minutes. Euro, just because everybody wants to know what's happening with the euro. Right now, the euro is sitting on a shelf. We're looking at this again on a daily chart. If I just let me just delete some of this. You can see right here, market has come back in. We've got trend line resistance. I mean, it's not that hard to see. Right there. And then the shelf that's coming in right here. A high probability here we're going to break to the downside. If we go higher, we're going to go about 134.75, and then that's a major level, 134.75. We get over that, it shows a major shift in trend direction, because we've done basically this on the way down. Up, down, up, and now we're in this channel again, consolidation across the market. Okay, so if we break out, we should break to the downside because trend continuation, right? But if for some reason the market breaks up and we break above this level right here, that's going to signal a major shift in trend direction, and we're actually probably going to put in a bat pattern. If my eye does not deceive me, I haven't actually looked at this. Let me just draw in some ratios here. Yeah, we're going to come into a bat pattern, which means a potential sell. Let me just do it like this to make it easy. Potential sell around the 886. So if we break out to the upside, we'll be looking to finish this pattern off here around an 886. And again, for some of you guys who've been with me for a long time, who are pro trader clients, who are technicians, this is going to make a lot of sense to you. And if you're not, then it's not going to make a lot of sense to you, but it doesn't matter. The important thing is that you see it again and again and again and again. And the more you watch the videos and the more you listen and the more time you're willing to invest with it, the clearer the market becomes to you. And now there's no getting caught off guard. There's no wondering what the market's going to do or not understanding what decision the market is making. It's all very clear. There's largely a sense of peace about what you're doing, because you know that there's no chance that the market's going to perform an action that you're not ready for. You always are in a position to take advantage. That's video 2, by the way, that comes out. One step ahead, cracking the market code. That's catchy, isn't it? I love it. That's my marketing skills. Mad marketing skills. But anyway, so that's it, guys. I hope this video was valuable. Couple of trading opportunities for you today. Talking more today really about process than anything else. And again, this is kind of prep for what we're going to be doing in May, just because I want you guys ready to go. I want you mentally thinking about those kinds of things. Please leave me a comment. Let me know what you thought about the video. Let me know what I can do better and what I am doing well. so I can continue to do that, of course. And then, of course, Syndicate is always open to you if you want to become part of that and get some free videos that Akil and I post there, and some more trading ideas, and also the live trading room, which of course is just killing it, killing it. And I will talk to you guys later. Till next time, good luck and good trading. Talk to you soon.